Good morning, all of you. We will go to Yuvika's question. We will not waste any time. First Yuvika, then Shiva. Yesterday I had told you. Yesterday we did Sarthak's question. I hope you understood Sarthak's question. In Sarthak's question, what happened? Very simple thing happened in Sarthak's question. That is 54 exemption was claimed. Getting it? For both the houses. Why it was claimed for investment in both the houses? Because his long-term capital gain was not exceeding rupees 2 crore. So basically exemption of section 54 was claimed. Exemption of section 54 can be claimed when you are selling any long-term capital asset which is house and you are investing in house. One house. One house where LTCG exceeds 2 crore. But when LTCG is up to 2 crore, you can invest in two houses. This way 54 is clear to you. 54 EC is also clear. You can invest in NHI bonds or rural electrification corporation bonds within 6 months from the date of transfer of long-term capital asset, which is land or building. Okay. So basically 54 is house to house. 54 EC is long-term capital asset being house or land, and investment is done in bonds. Time limits also you have understood. Lock-in period also you have understood. Lock-in period for 54 is 3 years, but lock-in period for 54 EC bonds is 5 years. All these things you have understood. You have understood time limit of investment. In bonds it is within 6 months from the date of transfer. But in house it is very interesting, the time limit. You may have invested 1 year before the date of transfer or within 2 years from the date of transfer in case of purchase of new house. But if you are going to construct new house within 3 years. Now, interesting point which you did not observe, and one practical situation will happen. Half knowledge is very dangerous. Practical situation is your friend sold house in 24-25. Which financial year? Please listen, all of you. Those who are doing other activities, listen. Very interesting. In 24-25, your friend has sold house, and your friend said that I want to save capital gains. So I have heard from somewhere. He says you that I will have to invest in house. Is it correct? You are doing CA. So you will say yes, yes, it is correct. What is the time limit? Time limit is 2 years from the date of transfer if you are going to purchase, or 3 years if you are going to construct. Half knowledge is dangerous. Listen now. On 5th Feb, he had sold that house. When? 5th Feb. So you 5th Feb 25. So you tell him, you have a lot of time. You have time till 4th Feb 27. 2 years from the date of transfer. And if you are going to construct, then 4th Feb 28. So you tell him, chill, we have a lot of time to invest in house. So he doesn't take any action. His exemption will be gone. Because when he has to file ITR, he has to file ITR on 31st July 2025. If tax audit is applicable to him, then he has to file on 31st October 2025. And he doesn't invest in house because you told him time limit is 2 years. Tell me, on date of filing return, what proof he has that he is going to invest in house? He will write a letter, I am going to invest. Please allow me exemption. Not possible. And neither he has invested in house. Time limit is 2 years. So you are within time limit. Here, government asks you to open account with bank, with SBI or any other bank, where they allow you to open CGDA, capital gain deposit account. So your friend has got LTCG of 40 lakhs. He wants to save tax on 40 lakhs. He should go to bank, deposit that 40 lakhs in CGDA, Capital Gain Deposit Account, on or before due date of filing ITR. He should do that. Then only this exemption will be given. If 31st July is gone and he has not invested, listening to you 2 years, then his exemption is gone forever. So dangerous consequence. Half knowledge is very dangerous. So you will say, sir, then why 2 years is given? We are getting confused. You are saying that invest now only. Right now, I'm not asking you to invest in house. I'm asking you to deposit in one account called as CGDA. Within 2 years, that is in our example, till 4th Feb 27, he should withdraw money from that CGDA and invest in house. But so CGDA is not long-term solution. CGDA is your proof that you are going to invest in house. So you will keep money aside, na? That money aside you have to keep in CGDA compulsory. Then only you can take this exemption. Otherwise, forget about this exemption. Got the point? What will happen if you don't use it for house within 2 years / 3 years? Then amount which you earlier got as exemption will get taxed in that PY in which that 3 years expire. They will wait for you for 3 years, hoping that you are buying under construction property. If nothing happens, then what to do? Then tax it in that PY in which 3 years expire. Or if in between you withdraw that amount from CGDA, use it for anything else, then also it gets taxed. Such is the point. Okay. So you have this short note given. You will afterwards read that short note. I have given you that short note of CGDA, where I have given you after 54, 54F, 54 is the exemption I have done now. After that, I have given you short note. Tell me page number 80. Check, see this CGDA. So I don't think I need to read it now. You all are smart. Same things which I told you. Let's go ahead now. Go to Yuvika, please. Go. Page number Yuvika is on page 91. Pay attention. Yuvika, Shiva. Their questions might have CGDA. I don't know, but I just thought I will tell you. Their question doesn't have 54F, that is for sure. We have not yet done 54F. We have done 54 EC. Today's agenda is Yuvika, Shiva, 54F, Mithun. Mithun means on transfer of shares. All these things. Okay, and also your practice question of whose practice question? Arav, Harshita. And A will be on insurance compensation. So almost today capital gains will be done. So we will get a 2 days lead because I was supposed to complete capital gain on 11th. Today is 9th. So let's see. We can invest our time wisely, doing many things. There are many things to be done. Don't say then we'll get extra off or what. No. Will you leave at 1? No. I'll take till 4 only. But we can do extra things. That is the point. Go to Yuvika. Go ahead. Let's not think too much ahead. First, let's go step by step. Yuvika bought vacant land for 80 lakhs. Oh, vacant land is bought. What is the problem? Problem is vacant land is bought. If land is sold, what will happen? Land is sold, which is long term. And if she cannot sell land and invest in house, 54 can be taken only for house to house. So land is sold and suppose house is purchased, then we cannot stay in what? Let's see what happens future. But I think she has constructed house on that. Let's see what happens. Yuvika bought a vacant land for 80 lakhs. What is 80 lakhs? COA. When is it bought? In May 2005. That is financial year. What 4-5? 5-6. You cannot afford to do such mistakes. 4-5 and all. Then no one can save you. 1st April financial year starts. So 1st April, will you fall in 4-5? 4-5 will get over on 31st March 2005. We are on in May 5. So it is financial year 5-6. I should not be teaching you this. Okay. Registration and other expense were 10% of cost of land. So this 8 lakhs, 10% of 80 lakhs means 8 lakhs. 8 lakhs is part of your purchase cost. Do you agree? 8 lakh is part of your purchase cost because it's a capital expense to buy the asset. Any capital expense to buy the asset will form part of cost of that asset. For example, if we are fitting AC here, installation cost of AC will become cost of acquisition, will become cost of that asset only. So anything that you are doing incidental to buying cost forms part of cost of that asset. So actually now cost of asset is not 80 lakhs, it is 88 lakhs. She constructed residential house building, see, for 100 lakhs in 7-8. What is 100 lakhs? At best, you can call it as cost of improvement. Actually, you can call it as cost of acquisition also. There was flat plain land. On that land, you are constructing house for 1 crore in 7-8. So now when you will sell, you will not sell land, you will sell house. She entered into agreement for sale of the above residential house with Mr. J, who is not a relative. In April 15, very good. In April 15, she has entered into the agreement. All of you, April 15. The sale consideration was fixed at 700 lakhs on 23rd April. Miss Yuvika received 20 lakhs as advance. You know what it is going towards. Advance will be forfeited now. Otherwise, they wouldn't have given this information. Why they will give you information of 2015? You are supposed to do all the calculations for PY 24-25. Why will they give you information of 15? They want to tell you that due to failure on part of Johar, said negotiation could not materialize and hence said amount of advance was forfeit. When? In April 15 means on or after 1st April 2015, this will get taxed under the head IFOS in that year. In AY, in which AY? 15-16. No, PY 15-16. AY 16-17. It will get taxed. Under which head? IFOS. Right now, we don't have anything to do with this. Nothing to be done right now. Just write note and leave it. Mrs. Yuvika again entered into agreement on 1st May 24 for sale of this house at 810 lakhs. You know now this is in PY 24-25. So she must have sold a house for 810 lakhs. Happy? Sell the house for 810 lakhs. She received 80 lakhs as advance by RTGS. Very good. RTGS. Real time gross settlement. Doesn't matter. Banking mode. Stamp duty value on date of agreement was 890 lakhs. Stamp duty value, this only you have to check na, on date of agreement, because date of agreement is valid. It is valid because certain amount is received in banking, so the date of agreement is valid. 890 lakhs is what? SDV, stamp duty value. Friends, I think you will neglect any other stamp duty values given. Are they given anywhere? Yes. It is given. See, the sale deed was executed, registered on 14th July. Very good. For agreed consideration. However, stamp valuation authorities had revised the values. Hence, value of the property for stamp duty purpose was neglect. You want to check as on the date agreement was entered into, just like in question of Sarthak. Take on your calci 810 into 110%. Very nice planning. Huh? Very nice planning has been done here. Stamp duty value is 890. Stamp duty value is less than 110%. This is best demonstration of planning. Stamp duty value is less than 110%. So neglect stamp duty value. FVC will be 810 lakhs. I hope you got it. Hello. Hello. Pay attention. Pay attention. Pay attention. Your actual sale price is not so less. When you do it when you multiply it by 110, then your stamp duty value is less. So government says we are not interested in this stamp duty value. You have sold at a good price. So 810 lakhs is the FVC. Neglect 890. I hope you got it. Yesterday, Sarthak, exactly opposite happened. Stamp duty value was exceeding 110%. So government said take stamp duty value. Clear? Now, what next? Yuvika paid 1% as brokerage on sale consideration received. Let her pay brokerage, that is your expense on transfer. All of you expense on transfer. So what will you get? You will get FVC 810 minus expense on transfer 81. You will get NSC minus the ICOA. Why ICOA? Did you see the date of sale? 1st May 24. Means that is before 23rd July. When it is before 23rd July, you don't have any option. Budget speech happened on 22nd July. This transaction has happened before that. So what? Neglect you cannot say that I will pay at 12.5%. Even if you want to pay, you cannot do that, because that everything applies on or after 23rd July, that golden date. So what you do? You take benefit of indexation and pay tax at 20%. Take ICOA, ICOI. Why ICOA? That 88 lakhs. ICOI 100 lakhs on 100 lakhs. Subsequent to sale, what Yuvika did? She made the following investments. Now, see friends, She has not sold land, she has sold house, because on the land she had constructed house. So this is not sale of land, this is sale of house. So house to house. For 1 minute I thought she is selling only land, but no, she constructed house and she has sold that. So house to house, section 54. Subsequent to sale, for sure Yuvika, as I can observe, is going to get CG exceeding 2 CR. It's visible because you have sold for 8.1 CR and your COI is hardly anything. I can see it is 88 lakhs and 1 CR. Even if you index it, then it in ICOI will be much less. So your LTCG will be much more than 2 CR. So you can invest only in one house. Remember, you can invest only in one house. Clear, na? Subsequent to sale, Yuvika made following acquisition or investment. She acquired two houses at Delhi and Chandigarh. Delhi is 130 lakhs, Chandigarh is 50 lakhs, and at UK also 180 lakhs. These three houses. Would you like to have exemption least or highest? Of course, exemption should be as high as possible. From yesterday, I am confusing you on one point. Investment in house should be in India only. So forget UK. My bad. Twice I have confused you. Now finally, investment in house should be in India only. Investment in house, somewhere I have scratched India. Please retrieve that. Investment in house should be in India only actually. So India. What is the, so forget 180 lakhs, 130 or 150. Which one will you consider? You will consider 130. So you will end up getting exemption of 130 or LTCG, whichever is lower. Is it said anywhere that you cannot take 54 EC if you have taken 54? It's nothing like that. You can take both exemptions together. You are having heavy LTCG here. I can see that. So she has subscribed to NHAI bonds for 50 lakhs. Ensure it is within time. It's on 30/11. 50 lakhs on 30/11 and 40 lakhs on 9/1. Your maximum exemption under 54 EC is 50 lakhs. Is it within time? May, June, July, August, September, October. After 14 July you calculate, because sale deed was executed and registered on 14 July. It is within 6 months. July, August, September, October, November, December, Jan. It is within 6 months. Go and enjoy 50 lakhs. But you can't enjoy 40 lakhs. Why? It may be within time, but limit is 50 lakhs. You can invest for purpose of 54 EC, maximum to the extent of 50 lakhs. That too, 2 years put together. Means what assessees used to do? Government use one word, that maximum investment that can be done for in 54 EC bonds is 50 lakhs in a financial year. What government use the word? Now people used to take disadvantage of that. What disadvantage? On 1st Jan, I will sell the asset. I will get LTCG of 90 lakhs. And within 6 months, I am covering 2 financial years. How? In March, one FY will end. So by March, I will invest 50 lakhs. In April, I will invest another 40 lakhs and I will take exemption of full 90 lakhs. But that was not the intention. So now if you read 54 EC's wordings properly, they say that investment in these bonds for the purpose of exemption cannot exceed 50 lakhs in that PY in which asset is sold and in next PY. Both PYs together it cannot exceed 50 lakhs. That is the intention. So dangerous is the provision. But in simple language, what I told you, that maximum exemption you can take is 50 lakhs. By that logic also you will get correct answer. Compute income chargeable under the head CG of Mrs. Yuvika for AY 25-26. The choice of exemption must be in the manner most beneficial to the assessee. Choice of exemption means she has invested in 3 houses. Out of 3, 1 is useless. UK is useless. Think about other 2 houses. Whichever is high, you will get high exemption. So you just show for exemption house of 130 lakhs, which is in Delhi. Delhi is 130, Chandigarh is 50. So Delhi you consider. Clear? Shall we start? Or do you want to attempt? Attempt? How much is Josh in your yes? Do you want to attempt? Yes. What type of yes you are saying? So write down computation. I don't want to spend double time on this. First I will give you time, then you will keep on looking at me, then again I will solve. I don't want that. So directly computation of what? What is asked? LTCG, na? Compute income chargeable under the head capital gains. Question number is, page number is, okay. Computation of LTCG in hands of Mrs. or Miss? How does it matter? In hands of Mrs. Yuvika for assessment year 25-26 in bracket relevant to PY 24-25. Agreed? On what? On sale of residential house, not plot of land. On sale of residential house on 14 July, I think 14 July 2024. Actually, na, transfer took place on 14 July. Consideration was fixed on 1st May. So now that's important because 6 months you will calculate from date of transfer, or for that matter in house 2 years and 3 years. You will calculate from date of transfer. When I see all the case scenario MCQs, then institute is really testing you on these things, small things only. So that's why I feel like making that points realize to you. Particulars, I would like to do figures in rupees, not so amount in terms of rupees. I don't want in lakhs. A point, full value of consideration. Is my full value of consideration See, stamp duty value is lower than 100 and lower than or equal to 110% of actual consideration. Yes or no? That is rupees 890 lakhs is lower than or equal to 810 lakhs into 110%. Therefore, actual consideration itself, therefore, actual consideration itself is dash. Therefore, actual consideration itself is FVC. Who tells you these things? Section 50C of Income Tax Act. So may I know what figure you will write? 8 crore 10 lakhs. Achha, by chance, if SDV was to be taken, still expense on transfer you will calculate on actual sale, because expense on transfer is 1% of what? Actual sale price. That's what sale consideration. Not understood, no? Not this. Not what? Not of stamp duty value. Less what? Less expenses on transfer. I think in excitement I said 81 lakhs. It's not 81 lakhs. It will be 8 lakh 10,000 because it's 1%. No? 1% of rupees 8 crore 10 lakhs. See, 8 crore 10 lakhs, 10% will be 81 lakhs. 1% will be 8 lakh 10,000. Be aware. If you don't have confidence, check on calculator. 8 lakh 10,000. C point, therefore, net sale consideration. So, what is net sale consideration? Tell me. I will check arithmetic accuracy. Eight crore 1 lakh 90,000. Now you be used to big figures, okay? Your client is not going to deal in small figures. Less indexed, all of you indexed cost of acquisition. How to calculate index cost of acquisition? That is ICOA. Can I first calculate ICOA of land? Can I say land is for, no, 88 lakhs into 363 upon, do you have given when was land purchased? 56117. So upon 117. Yes, can you tell me? Two crore 73 lakh, like this. 2 crore 73 lakh 2,564. This 88 lakhs I am putting a star and telling you here rupees 80 lakhs plus, what is that? Now what is that 10%? No, that I know. Being registration. Being what? being registration and other expenses. Agreed, na? So please index it, and you have already got the figure. ICOA you have got. Go for, you can say ICOI, or you know what you can do, slash it is ICOA also. Whatever it is of what? It is of house. Can you tell me house? Eventually what? You will get deduction of that. 100 lakhs. But when? So into 363 upon 129. So can you help me with the figure? 2 crore 81 lakhs by 30, like this. So if you minus this both the figures, you are going to get what? You are going to get E point LTCG. What is LTCG? Two crore like this. 2 crore 47 lakh 47,902. Is it clear? F less exemptions. All of you exemptions. First exemption is 54 with respect to investment in, yes, all of you with respect to investment in house. Okay, next line just write allowed only for one house, allowed only for one house in India, that too in India. Why only one house? As LTCG exceeds 2 crores. Clear, na? Investment is within time and no need of use CGDA, because you are investing in the before due date of filing ITR only. So you are directly investing in house. CGDA was what? Just a bridge. It was just for time gap, isn't it? CGDA was because you were not investing in house till due date of filing ITR. If you are directly investing in house, no need to use CGDA. Can you help me with exemption? So exemption will be lower of A LTCG. What is the LTCG? 2 crore 47 lakh 47,902, or amount invested, or amount invested in house. How much? 1 crore 30 lakhs. In bracket write down house with highest cost in India is considered. In India is considered to maximize what? To maximize exemption. Actually, UK's house price was 180 lakhs, but you cannot take it. It is not in India. So house with highest cost, that too in India, is considered. in order to maximize exemption. So what will you get? Exemption of 1 crore 30 lakhs. Can you take 1 crore 30 lakhs in bracket? What next? Sorry, 54 EC. So can you write next line? Exemption under section 54 EC, that is with respect to investment or deposit in bonds. Which bonds? Which bonds they are? In NHAI bonds within 6 months from date of okay. So friends, exemption will be how much? So basically lower of LTCG or amount invested. Now amount invested you are saying is 50 lakhs and exemption is sorry, LTCG is 2 crore 47 lakh 47,902. So how much you will take? Please take 50 lakhs in bracket and write there that further investment in which bonds? No, further investment was in which bonds? NHI only. Achha, further investment in NHI bonds of rupees, fantastic, 40 lakhs is not considered, comma being limit being rupees 50 lakhs. So please minus this and tell me what is taxable LTCG. I will be happy to know your taxable LTCG. Sorry, I am not getting it. 67 lakh 900 and like this. Is this figure correct? Seems to be correct. So from by selling asset of, see what you have done in last 2 days, by selling asset for 8 crore 10 lakhs, you have gone down to paying tax only on 67 lakh 47,902. So you should be proud of yourself. So write notes. How many notes you want? Any idea? Any idea? 3 notes minimum. You tell me on which issues you want note. Tell me how do you think I want to know? Tell me. On which issues you want note? What? SDV, that we have dealt in that only. That is already dealt. Advance is very important note, which you have not yet touched. So advance is one. Second, why you have taken SDV as on May. Which May? 1st May. Why you have taken as on that date? That's second. And third, I had thought something, I forgot. Huh? Let's see. I'll remember on the way. So first, write down as per section 50C of Income Tax Act, if stamp duty value exceeds 110% of actual sale consideration, then stamp duty value shall be taken as full value of consideration. Full stop. Continue. Otherwise actual sale consideration shall be actual sale consideration itself shall be dash. Itself shall be full value of consideration. Clear? Full stop. Continue. For this purpose, SDV, stamp duty value, as on date of transfer, is to be considered usually, what? Usually, isn't it? But where the date of fixing consideration is a different date, then SDV as on such date, can be considered. Okay. However, there is one condition. However, as on date of that agreement, fixing such what? Fixing such consideration, comma, at least part of consideration, is to be received on that date. What? That date. How? But on that date. How? By way of account pay, check, bank draft, ECS, RTGS, NEFT, or such other mode, or such other what? Mode. Full stop. Continue. In given case, small note now. Whenever you forget this point, you come to this note and read. In given case, transfer takes place on, yes. In given case, transfer takes place on 14th July 2024, but agreement agreement fixing consideration agreement fixing consideration has been entered into on 1st May 2024, on which date advance of how much? Advance of rupees 80 lakhs was received. By what way? By RTGS. Full stop. Continue. Hence, SDV as on 1/5/2024, that is rupees 890 lakhs is considered. Did you understand why you consider 890 lakhs? This note was for that. Why you considered 890 lakhs? May I go to next note? Next note, I remembered I wanted to give you on what? Second note, advance. What happened? 810 is actual consideration. Why you are telling me actual consideration? Stamp duty value, I am telling you why I have taken 890 lakhs. Got the point now? See, there were two options for stamp duty value. One was 890 lakhs and one was and another was 900 lakhs. Whole dynamics will change. If it goes beyond 891 lakhs stamp duty value, then you will have to take that as FBC. Whole dynamics will change. Your CG will directly jump up by 80 lakhs, not 80, 90 lakhs. If you take 900 lakhs as stamp duty value, then directly your CG will jump by 90 lakhs. Means your tax will jump by 18 lakhs. So I hope your every provision makes so much impact on client's pocket. Assume now 1 minute, if you did not know this provision that you can take as on date of agreement, then you will consider 900 lakhs and then you will do 810 into 110%, it will become 891 and SDV 900 will be greater than 891. Then you will take FPC as 900. Then your LTCG will increase by 90 lakhs and tax on that by 20%, 18 lakhs. 90 lakhs into 20%. I can still see some speaking. Are you mad? Hello? 18 lakhs we are discussing. What are you doing? You come here. Discuss what provision I am saying. Tell me. Tell. You are going to bring lot of disadvantage to your client. If you take 900 lakhs, I am saying what disaster will happen and you are busy there. What should we do? Tell me. By 90 lakhs, your CG will increase, LTCG. On that tax by 20%, 18 lakhs. You pay me the fees of health and education cess on that 18 lakhs. That itself will be 72,000. Who is responsible if you do that? Only you. If you understand this after 2 years, your client's extra money 1872 gone. Your client will take a gun and shoot you. Literally, no other option. You can't do anything. Because due date of filing revised return would have gone by that time. Due date of filing revised return is 31st December of the AY. To understand, this you did for AY 25-26. 31st December 25 is the last date of filing even revised return. So after that you can't do anything. You just have to say Om Bhat Swaha. Deep breath in, deep breath out. 18,72,000 gone. Please understand repercussion. Afterwards you can file ITR-U. ITR-U means ITR updated. But that cannot be for your favor. Means when it is in your favor now. Means when you want to reduce liability, then you cannot file that ITR-U. ITR-U can be filed only when you have less declared and you want to increase the liability. Means what? I forgot to declare 50 lakh rupees of PY 24-25 and my last date of filing return is over and last date of filing late return is also over. What is belated return? You say a belated happy birthday. Now belated happy birthday means my birthday was on 8th September. You can't say belated happy birthday on 31st October. I will slap you. Right? Because there is a last date of belated also. At the most till 15th September you can say belated happy birthday. After that, no, it's over. Did you get? So there is a last date of filing belated return also. Original return you had to file till 31st July. Belated return 31st December. After that you can't do anything. But if you are bringing gift for me on 31st October, then I will accept it with both the hands. I will say happy, you will say happy birthday belated. I'll say thank you, give me the gift. So that's what government is saying. See, provision is serious. Belated date is also over. Government is ready to accept. Return late also. That is called as ITR-U. ITR updated. But that updated ITR you can file. There is a condition that ITR-U which you are filing cannot reduce your liability, cannot increase your refund, cannot increase your loss. In short, what? If it is in government favors, then only file. And you know what? Additional tax payable if you have discovered in that ITR-U as 10 lakh, then you will pay 10 lakh plus 25% of 10 lakhs as penalty. You are wishing me late, no? So you should give me, you wanted to give me gift of 1. You will now not give of 1, you will give of 1.25. Means tax will be increased by additional tax on that penalty, late fees, interest. Then you can do that. So in short, you cannot in future reduce liability, in future you can increase liability. That is always welcome. This ITR-U can be filed for 2 years after the end of the assessment year. Means you could have filed it till 31st March 2027. Till that date you can file ITR-U and increase your liability. But no provision for decreasing. So you have to be very cautious. After 31st December, your window is closed. Okay? So be careful. In real life, so you will get time to think. In exam, you will not get time to think. Okay? So, advance what? So you will find CS busy. You will find chartered accountants busy, those who practice in tax on 31st March. Because it's going to be some last date. On 31st July, It's going to be last date of filing ITR. On 31st October, ITR for companies and those people for whom tax audit is applicable. On 30th September, last date of filing income tax audit report. On 31st December, this last date of filing revised return or belated return. These are important dates in a CS life if he is practicing in income tax. Okay. See. So what I was saying now, advance. So what I discussed now with you now, ITRU, belated return, revised return, due date of filing ITR, all these I am going to again discuss with you in the topic of ITR, income tax return. Advance received and forfeited. Advance received and forfeited for sale of house, for sale of house by Yuvika in which month, in which year? In April 2015 shall be taxable, in her hands, shall be taxable in her hands in FY, means in PY 2015 dash 16, that is AY 16 dash 17, amounting rupees, sure na, amounting rupees 20 lakhs under the head, very good, under the head income from other sources. No, see, I'll tell you what. One thing I will tell you. You are declaring that you have received in cash. Government will put red carpet and get tax on that. It's not about its provision. You want to pay the tax, na? So you receive in cash or you receive in bank, what it matters. Today, if I tell government that fees last year 1 crore I had received in cash, can I pay tax? They'll say, please. Got the point? So receiving in bank was important when you had to prove something. I don't need to prove that I have received in cash 20 lakhs, because when I am saying I have received, I am ready to pay the tax. RTGS, NEFT all came into picture when I had to prove that 1st May is correct date, because I am interested in taking that 890 lakhs as stamp duty value instead of 900. I want to prove that, na? That's why. How will I prove? Only if entries in my bank. But if I say as Yuvika that I have received 20 lakhs in cash on which I want to pay tax, government will say, of course, pay tax. Got the point? Think, everywhere there is a logic behind law. Good that you asked. Third point. What is last note? Please tell me. See, other things we have written in the question only. Why only one house? We have written in question. Why not UK's house? We have written in question. Why 130 lakhs house? We have done that. Why 54? You see, only one investment is considered. We have done that. See, this is such a master level question that to solve this question, you had to have so much knowledge. Then only you were able to solve this question. Yes, tell me. So one note that is pending. If you observe in Sarthak's question, we did calculation in both the ways. That note we'll have to write. If you check in Sarthak's question, we did calculation in both the ways. Means with benefit of indexation also, without also. When we took benefit of indexation, we paid tax at 20%. Without benefit of indexation, we calculated at 12.5%. Sarthak, we did both the things because his transfer was on or after 23rd July 2024. But this is before. So confidently we did only in one way. That was the point. So since transfer since transfer is taking place on, sorry, not on, before what? That golden date, 23rd July 2024. Since transfer is taking place before 23rd July 2024, assessee shall pay tax on LTCG, shall pay tax on LTCG at the rate of 20% without benefit of, sorry, I was thinking about something else, to be honest. I was thinking that 18,72,000 which I calculated was not correct because surcharge will also be there. Because the total income has already exceeded 50 lakhs. Surcharge also will be there. So 18 lakh plus 1 lakh 80,000. 19 lakh 80,000 plus cess on that. I was thinking of that. So see, assessee shall pay tax on LTCG at 20% after considering what? After considering benefit of indexation. Done? Understood? This is your question. We took nice 1 hour, but because we discussed many things, go to Shiva. I hope no notice pending now. Go to Shiva on page 91. Are you there, all of you? Lot of adjustments. Shiva's question. Shall we? Shiva purchased HP on 15th Feb 1979, means before 1/4. Pay attention if you want Shiva's blessing. For 3,24,000 cost of acquisition. In addition, he paid stamp duty value at 10%, but on stamp duty value of 3,50,000. In short, 3,24,000 plus 35,000, 3,59,000 is what? 3,59,000 is your cost of acquisition original, but you have acquired before 1/4/2001. So see, in April 2008, Mr. Shiva entered into agreement with Mohan. Something clicks. April 8, prior to 1st April 2014, and you know what is going to happen. he is going to forfeit it. That's why this information is given. For 14,35,000 and received amount of 1,11,000 as advance. However, sale consideration did not materialize and Mr. Shiva forfeited the advance. Please minus it from cost of acquisition. Whatever cost of acquisition you decide now, from that you minus. I am not saying your cost of acquisition is 359. It will be 359 or FMV as on 1/4/2001, whichever is higher. From that you minus this 1,11,000. However, this done. May I go ahead? In May 15, he again entered into agreement for sale. May 15. You know what it is going towards. Again, he is going to collect money and not sell. But it will be taxed under IFOS because this is happening when? On or after 1st April 2014 and received 151 as advance. However, as Deepshika did not pay the balance amount, Mr. Shiva forfeited the advance. IFOS. This will come in notes. No effect right now. However, that's done. In August 15, Shiva constructed. Now he has got money of that advance also. He constructed first floor. What is this? In which year? PY 1560. On November 15, 2024, finally he entered into agreement with Manish. Again he entered into agreement for sale of house for 30,50,000 and received 155 advance through account pay check. Manish paid the balance, entire sum, and Shiva transferred the house to Manish on 20 Feb 2025. 20 Feb 2025 means after 23rd July 2024. So friends, you have to do in both the ways. Take benefit of indexation and calculate at 20%, or don't take benefit of indexation and calculate at 12.5%. Mr. Shiva had paid the brokerage at 1% of sale consideration. So expense on transfer is going to be 30,50,000 into 1%. 30,500. Happy so far so good. On 1st April 2001, you wanted this FMV. It was 11,85,000. But see the complication. Stamp duty value is also given. So you will consider FMV, but it cannot exceed SDV. So your FMV considered on this date will be 10 lakh. So much knowledge you are applying, just remember. One knowledge you applied was asset is transferred prior to 1st April 2001. Second knowledge, calculation of advance received forfeited. And you can't say, sir, 2 to 3 special cases we are applying in one sum. Who told you that they can't be? Special cases so I have done for you to understand. It can happen multiple special cases in one sum. Why not? Further, value as per stamp valuation authority on 15 November was 39 lakhs and on 20 Feb was 41 lakhs. So 50C also you have to apply for FVC. Which SDV will you consider? 39 lakhs or 41 lakhs? 39 lakhs, because as on that date advance was received in banking mode. Do on your calci 30,50,000 into 110%. 33,55,000. SDV is way higher. So you are fooling government. Government says we won't get fooled. FVC is SDV. FVC is 39 lakhs. Compute CG in hands of Shiva for AY 25-26. Also compute tax liability under 112, assuming that basic exemption limit has been fully exhausted. Means there are two options, 20% or 12.5%. Amazing sum. 8-9 mark sum. Let's do. Let's do. Or you want to try? Question number is, page number is 91. Start, friends, start. Give the heading. Computation of LTCG and tax payable or liability under section 112 of Income Tax Act on sale of residential house. By the way, he has not invested anywhere no, for claiming exemption. No, no, that is not there. Fine. On sale of residential house for AY 25-26, PY 24-25. Option 1. Option 1. Thanks to Raghav Chadda ji. Option 1. Option 1 is, all of you on option 1, take benefit of indexation and pay tax at, yes, I will tell you without solving also, this will be better. Why? Because you have bought property in 1979, means from beginning you are going to get benefit of indexation, means in denominator you are going to have 100 and in numerator 363, means your cost of acquisition will become 3.63 times and you will be able to subtract that. So of course what is going to be better is this. Before solving also we can tell. But if property was purchased in 1516, something like this, then close calculation. But this is like match of India versus some Netherlands, where India is only going to win. Not cut to cut match. Okay, not like, got it now? It's not tough to understand. See, particulars amount in terms of rupees. Start with A point, full value of consideration. Full value of consideration. Section 50C of IT Act you are considering. In that, what you are doing? SDV of rupees 39 lakhs, isn't it? Is greater than 100 10% of rupees 30,50,000. Therefore, SDV is equal to FVC. So far, so good. SDV as on what date is considered? 15th. SDV as on 15th November 2024 is considered, being date of fixing consideration, comma, on which advance is also received. On which advance is also received. How it is received? By way of account pay check. Clear, na? Can you tell me how much you are supposed to take? So we discussed already. You should take 39 lakhs. Did you take 39 lakhs? B point. What is B point? Less. Can you tell me what is expenses on transfer? But expense on transfer is what percent? But in haste, don't take 1% of 39 lakhs. It is 1% of actual sale consideration. Mind you, that is 1% of 30,50,000. So what is that? Can you subtract it? Can you tell me what is your, therefore, net sale consideration? $38.69. Check. Arithmetically. You are right. Now, D point, less indexed cost of acquisition. Indexed cost of acquisition. For that, we want COA, by the way. So, which is equal to COA. I don't know what is COA. Multiplied by 363 upon 100. But I don't know COA. So, what is COA? In this case, COA, can I say COA is higher of 2? What 2? Original cost of acquisition. What is original cost of acquisition? You told me original cost of acquisition is 3,24,000 plus 35,000. How did you get 35,000? So how much you are getting? 3,59,000. But this is not your conclusion. Or FMV as on 1/4/2001. Now FMV as on 1/4/2001 is What is the FMV actually? Huh? Eleven lakh, 1185, but cannot exceed. But cannot exceed what? SDV. That is rupees. 1070. 1070. So FMV becomes 1070. So FMV is 1070, and original cost of acquisition is, thank you, I have, original CO is 359. So don't forget, don't take it in outer column directly. Therefore, COA is 10 lakh 70,000 less advance received and forfeited prior to 1/4/2014. What is that? 1 lakh 1,11,000. This is now finally your cost of acquisition. So what's your COA to be considered? 9 lakh. Are you all getting 9,59,000? Yes, no? What should you do now, friends? 959 you put here. 959 you put here, and tell me what is your indexed cost of acquisition. $34.81. 34, it seems correct. 34.81, 170 is indexed cost of acquisition. Is there improvement also? When is improvement taking place? Right? ICOI. How much is the amount incurred for improvement? 3 lakh 90 into 363 upon, when did improvement take place? 2015-16. 254. Take upon 254. Tell me. 5,57,000, like this. Tell me finally what is LTCG? And there is no exemption claim because there was no need to claim exemption. You will see how. What is LTCG? If you get negative, don't be afraid. It is LTCL. Take on your calci 38,69,500 minus 34,81,170. 1 lakh. Friends, this is best. There is a loss. No need to pay tax. बधाई हो, लॉस हुआ है. So you should be happy when there is loss. No need to pay any tax. So actually, even if I don't do second calculation, it's okay. But academically, I'll do. Because this is best possible thing. Zero tax. What will you do with loss? Very, very interesting point. Whatever you're doing, stop that and listen to this. What will you do with loss? What have I taught you? Long-term capital loss or any loss can be set off. If not set off, it will be carried forward. But listen carefully, not this loss. This is favor that government is doing on you, allowing you to pay tax after considering benefit of indexation. This facility is given just for calculating tax. So if you have any loss, it will lapse. Very unique, very unique. Actually, what government did? 12.5% without benefit of indexation. But because Raghav Chadda, they have said something, Parliament had to do something, and they had to bring a provision allowing you to calculate at 20% after considering benefit of indexation. Now, because of this indexation and because of all these things, government says, if you have a loss, forget it. At the most, what we can do? Zero liability. We cannot take your losses and allow it set off. Agreed? At any other place in income tax, I will not tell you like this. HP loss, I will respect it. Business loss, I will respect it, but not this loss. Very, very unique point. That's why I said very nice question. So what you will do? Tax on LTCG under section 112 0, because income is only 0. Very, very important note. You will put a box around this note afterwards. Such LTCL, of rupees 169,032 shall have no effect, in IT Act, shall have no effect under IT Act. It can neither be dash nor dash. It can neither be carried forward nor set off. See, if these things happen now, under that without benefit of indexation, then it's fine. Then you can carry forward set off, but not under this. Just for our practice, let's calculate by 12.5% also. Of course, you cannot leave it like this. That's a very simple working now. Give the heading. What heading now? Alternatively, computation of LTCG under section 112, where no benefit of ठीक है ना. So what will you do now? What will you do now? A point FVC. Okay, don't do time pass. NSC. Why will you do time pass? It's going to remain same. What is NSC? 38 lakh 30 69,000. B point less COA less COI. What is COA? 9 lakh 59,000. What is COI? Don't take indexation benefit. 3 lakh 90,000. That's main, no? So what is your LTCG? What is LTCG? Hmm? Hmm? 25 lakh? Take this as LTCG. Have you taken? Next line, tax on above. You know tax on above at 12.5%. What is that? Add health and education says at 4%. How much it is? 3 lakh? 1 5. So health and education says is how much? 12,000? Fine. Tell me what is tax? 3 lakh 27,666. Friends, of course, what is better? Advice. It is visible to you what is better. It is better to take benefit of indexation and pay no tax. This way we complete Shiva's question. But one note is there. What note? That note is there, na? Advance. Advance received by Shiva for sale of this property and forfeited on or before, sorry, on or after 1st April 2014 shall be taxable under the head income from other sources. How much is the amount, friends? Therefore, amount of rupees 1,51,000 received on, when is it received? Date is there? No? Received, okay, then say in. Received in August 2015. Huh? Acha, date is not there though. Sure now? Now will not ask me to change, right? Amount of 1,51,000 received in May 15 as advance and forfeited shall be taxable in PY what? 15-16 AY 16-17 under the head income from other sources. Now actually the question is, did you understand it well? Say yes. Of course. Can we go to Mithun? See, when Mithun is done, but before Mithun, 54F. Who will do that? We only have to do. Go to F. Please go to F. Don't be shy. What is F? What is F? Pay attention. You are selling. You have bought a lot of assets which are long term. But other than house, now it is time that you sell those assets and buy house. So you have either 0 houses or you have 1 house, but not more than 1. And you are selling other assets. Other assets, shares, jewelry, plot of land, some other asset you are selling. And what you are buying? House. Within what time? That same time, which you know, 2 years slash 3 years, that same time. Like in 54. Then listen carefully. Hello. Most important point. Then you will get exemption. So what's different then? Two things are different. One is 54 is house to house. F is asset other than house, which is LTCA. Investment is done in house. Different point is the quantum of exemption. Very different. Very different. If you invest entire NSC, then you get exemption of entire LTCG. So means what? In 54 and 54F, if you wanted exemption of full LTCG, you should have invested LTCG, not NSC. Do you agree NSC is different? LTCG is different. To get LTCG, we minus COA, COI. So if I got exemption of, if I got LTCG of 40 lakhs and I want exemption of 40 lakhs house to house, I will invest only 40 lakhs. I'll show you what's was happening in house. In 54, what's happening, and in 54F, what is the difference? I will tell you. This is H to H, house to house. This is asset other than house to house. After some days, please don't message me what is H to H. House to house, other than house to house. Anyways, that should be LTCA. This other than house should also be LTCA. The exemption, suppose you sell HP, if you sell HP for FVC of 100 lakhs and if your expense on transfer is 2 lakhs, then 98 lakhs is your NSC, and say your ICOA, ICOI, whatever is 48 lakhs. Now your CG is how much? 50 lakhs. Friends, if you want exemption of 50, you should invest 50. If you invest 50, you will happily get exemption of 50 and taxable will be 0. This is what you have been doing. F. F takes your seriousness for buying a house. F says, see, F says how much is in your bank account right now. Opposite party gave you check of 100 lakhs. Out of that you spent 2 lakhs. How much is lying in your bank? 98. Government is saying in F, you want a house, you want to claim exemption. What have you sold? You have suppose sold plot of land. Here what you have sold? House. Same figures, suppose. Same figures. Suppose same figures, huh? Suppose. Then government says invest rupees 98 lakh for exemption of, tell me, 50 lakhs. And if you invest less then not zero. You will get, but on proportionate basis. In short, there are two possibilities. Understood seriousness of F? F says why you sold other asset for creating house. Then why you are investing only LTCG in house? Invest full NSC in house. So serious is your F. Means who is strict in giving you exemption? F is strict. 54 and 54 EC was saying invest only LTCG. You will get exemption of LTCG. But F is saying invest NSC. Then you will get LTCG. Very strict. 54F. That's why I always keep 1 day gap between both. So you have first observed what is 54's exemption, and now you come to F. So what is F saying? There are two possibilities F is saying. What are two possibilities? You have invested what? Entire NSC. You have invested entire NSC. Then exemption will be equal to LTCG. No compromise. No compromise. But if you have invested, tell me, less than what? NSC, then you will get exemption. We are not so bad. You will get exemption, but on no need to mug up. I'll show you how. No need to learn the formula. No need to mug up the formula. I'll show you how. But once you're done with this, I'll show you. Done? See what happened. Can I continue same example? Say in our Abavilu assessee invested rupees 49 lakhs in house. Abavilu means you know, na? What has happened in Abavilu? If you don't know, I will tell you. FPC was 100 lakhs, rupees in lakhs. FPC was 100 lakhs. Expense was 2 lakhs. NST was 98 lakhs. Minus ICOI was 48. LTCG 50. Now comes less exemption under section 54F. Most important that we are learning. See, if you would have invested 98, if you would have invested NSC, you would have got exemption of full 50 lakhs, but you have invested 49. So exemption will be how much? I gave you this figure of 49 so that you can mentally do it. 49 is half of 98. 25 lakhs will be exemption this way. So what have you done? We have done 50 multiplied by 49 upon 98. What is 49 upon 98? Proportion of your investment. So you will get exemption on proportionate basis. So what is this 50 into 49 upon 98? Figure to I will get 25 lakh. My question is simple. What is the formula? What is 50? What is 50? Therefore, exemption under 54F. Can I set the formula? What is 50? 50 is LTCG multiplied by what is 49? Amount invested. And what is 98? But that's the formula. For examiner satisfaction, write the formula also. Fundamentals. Keep fundamentals strong. Very strong. I was earlier not teaching for CA because I thought CA students don't need me. But then people started telling me we are putting capital gain for option, PGP for option. Then I thought, what is this? Being a CA, you can't do this. Can you clear CA without income tax? 2 topics also, yes. GST, so you can score 40 out of 50, and rest of the topics in income tax, you can still get 20 above and get exemption plus marks by putting PGBP and CG for option. Bad option, but what will you do in final? And what will you do being CA? So critical topics they are. You must have understood it till now. That your whole CA knowledge will be required in PGBP and CG only. You can't do that. Students will clear doing IFRS HP, salary, deduction of chapter 6A, clubbing set of carry forward advanced tax CDSTC. You will clear doing that also. I'm not saying no. What clear? You will get 65 plus also. I told you strategy. 40 out of 15 GST and 25 out of 50 in income tax. 65. But don't do that. You can't put, these are so beautiful topics. When you understand them, see, at time of understanding, you're understanding. Na? So now only point is how will you keep them in mind. So you have this small notebook made with you. But keep on reading that notebook twice, thrice, required, whatever required number of times. Secondly, I told you 25 out of 25 case scenario MCQs. Because they will compel you to think on what you have written in the notebook. Is application. See now, 25 you will minus. What will you get now? So when I understood now that people are leaving this topic for option, then I stepped into teaching for CA also. Otherwise, I thought, okay, CA students don't need me. So I was happy with CS because those students always think tax is not for them. So I should convince them it is for them and teach. But now when you also start feeling, then it is my responsibility to make you also convince that you cannot put it for option. So taxable LTCG is what? 25. Understood? 54F is done. One point I want to tell you which surely you will get clean bold. It's a googly. It's a very googly, means court had to decide this. And then CBDT had to bring circular on this. Such a nice point it is. I'll give you one case, you tell me what will happen. I am company doing business. I have plant and machine which I am using from past 5 years. Forget plant and machine. I have land. I have land which I have been owning from past 5 years. Getting it? Wait, replace land by building. Last replacement. I have building because what I want to tell you will make most sense here. I have building which I am owning from past 5 years and I sell it now. So actually when I sell it, I am selling depreciable asset. So what will happen? Its sale price will go down from opening WDV plus addition and my WDV for depreciation will go down. But assume that block of asset has stopped to exist. Slash my sale proceeds are greater than opening WDV and additions. So there is a gain. Which gain it will be? STCG. So far so good. I have got STCG of 40 lakhs. Now please tell me tax planning. How can I save this? Okay, I will tell you. You tell me correct or incorrect way I am telling you. You are my CA. I tell you that 40 lakhs is my STCG on sale of machine. I want to invest in 54 EC bonds. Can I go ahead and take exam? That is your question. 54 EC bonds within 6 months. I want to invest this 40 lakhs and take exemption. Can I? It's building. Building is there, no? Not machine, sorry. Building is there, no? Land or building. Can I confuse you? Can I confuse you? Which gain I have? Short term. Now tell me. I am company is okay because any SSC can claim exemption. Any SSC can claim exemption of 54 EC. So that problem is not there. Ah, my gain is STCG, but my asset is LTCA because it is held for more than 24 months. So conclusion is I can do that. So there is a paragraph given on that also here. Read it. See this paragraph. Read what it is saying. Whenever any SSC is in business, any SSC in business, because see in business you transfer building, you will get which gain? Short term, but asset might be long term. So you can go ahead and enjoy benefit of 54 EC because 54 EC's condition talks about transfer of long term capital asset being land or building. It doesn't talk about gain should be long term. It says that asset should be long term. Getting it? So I have taught you differently now. If you remember in the beginning, our LTCA, STCA definition was different. And then we discussed LTCG and STCG. And I told you that on transfer of LTCA, there will be LTCG. On transfer of STCA, there will be STCG. But section 50 on depreciable asset, whenever you get gain, that will be always short term. But asset might be long term. Remember this. There are two different things. Very, very deep. Again, 54F, which we discuss, also will have this lock-in period. That I am assuming you will understand. And by the way, 54F also will have one limit. Exemption 10 crore. Cannot exceed 10 CR. And investment is in one house. Lock-in period will be 3 years. Are you ready? Last thing for this session. What you are going to learn now is probably the most headache in India right now. Capital gain on transfer of shares. Capital gain on transfer of shares. See why I'm telling headache. You'll understand. And probability of this being asked in your exam is like 98%. That much important this is. Transfer of what? Shares. Do you agree? Why I should learn it as a separate case? It's a different special case. So this I have not printed in the book. This will be case number what? Whatever you have done. Extend. This is the next case. Case number I think. How much? 8 only. No. We have done many cases. Before exemption. This was our 7th. Acha. 8th was this. 50C. 9th. See. What is happening? Transfer of shares. Actually, what you should take as cost of acquisition is the biggest issue. See, already I am assuming you know tax on shares. If it is unlisted, listed, basically listed has different tax. You have seen, where you have seen in the initial session where I discussed rates of tax in case of capital gain. You have seen, and I will again revise that with you, no problem. COA, but main is what will you take as purchase cost. You will say, so what, sir? What you have spent for buying the share, take that. But it's not so simple. It's not so straightforward. First of all, your shares could be of 3 types. They could be original shares. Original means you have bought them. There could be bonus, or they could be acquired in right issue. Do you know this? Right shares? Yes or no? In right issue, if you don't know, I will tell you, you get shares at some concessional price. So if market price is going on 200, you will get for 180, something like that, at a lower price, because you are existing shareholder of that company. That is right shares. So what is the cost of acquisition? Cost of acquisition is actual amount paid. Actual amount paid to acquire such shares. To acquire such shares. No problem. What about bonus? Bonus means what? That what Reliance does or Eicher Motors does. They keep on giving you bonus. Bonus in some ratio. That's why you become rich. That's why your wealth gets accumulated. Bonus, bonus. You had 2 shares and they say declared bonus of 2:1 means you will get 1 share free against every 2 shares. So now you are no longer owner of 2. Now you become owner of 3. And say you hold it, hold it, hold it. After a few days, they again come up with bonus issue. Then again they will add. And suppose by now original 3 you had bought 1 more. So you had 4 shares. Now again they came up with bonus of 2:1. You will get 2 shares now because you're owner of 4. Against 4 you will get 2. Now you have 6. That is how you get rich in stock market, by holding long term. Getting it? So there was one survey I told you. If you would have not bought Bullet, Bullet is the bike, Royal Enfield by Eicher Motors. In 2004-5, instead of buying a Bullet of 80,000 rupees, same 80,000 you would have put in Eicher Motors. Its value would be 8 to 10 crores. That is the study, because that's how they did split, and they gave bonus. They split the shares, they gave bonus, they kept on increasing intrinsic value of their shares. That way, you would have become, you know Wipro story. If you don't know Wipro, the story of Wipro, Azim Premji's Wipro, you check that story. The village where it used to stay, now that is called as village of millennials, because every person was compulsorily made to take the share of 10 rupees, some shares of 10 rupees. And now you check Wipro's shares price. And suppose someone would have asked to compulsorily buy 1,000 shares for 10,000 rupees that time, and today its value. Check. And in between, if he wouldn't have sold, it would have accumulated, and bonus and all, it would have gone in crores of rupees. And literally, it's like that. Okay. Many households became rich because their grandfathers had bought shares. So actually, when my grandfather passed away, we found some shares kept in suitcase on the attic, piece of papers. We converted into demat. Getting it? Colgate and all whatnot companies, Palmolive, whatnot companies. So that's the power of those shares, long-term investing. Many people, Reliance employees have become wealthy because Reliance, security guard in Reliance was made compulsory to buy the share, and that time he bought at face value or some discounted price, and today see its value. So basically, as the owners are earning, you are also simultaneously earning. But owners, the promoters, they have a huge shareholding. You have 0.00000001%. That is sufficient. That itself would run in crores of rupees if company does well. Okay. If company doesn't do well, what you have invested, forget it. So anyways, its taxation is important now. Earlier, you know, LTCG was used to be fully exempt, but now they are saying LTCG will be taxed in excess of 1.25 lakhs. Remember that, 1.25 lakhs. In excess of 1.25 lakhs, you will be taxed. At what percent? At 12.5%. But if it was before 23rd July, then the percentage was 10. So it is taxed now. When it is taxed, when you sell actually, if it's a notional gain, means I have not yet sold, I am just checking my value. Good, 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 it is in crores, let it be, I don't need the money. Then it is not taxed. When it is taxed, when you actually transfer. At that time only it is taxed. So now see, and see, earlier people used to do that. They did not used to sell, because earlier selling was very difficult, because it used to be in a physical form. So something which is difficult to sell, you avoid. But today I can sell. While teaching you also I can sell. It is so simple on one click. So one is tempted to book the profit. But at that time, first of all, more discipline. Second, less avenues of spending. They don't need iPhone of 1.5 lakhs. But we need. Correct, na? Got the point. So that's why they used to invest. And they keep it like that. Now see, bonus shares, there are two possibilities. Bonus shares, actually what is bonus shares? COA, cost of acquisition, 0. Have you paid anything for bonus? You just got it. So actually, bonus shares cost of acquisition is nil. But government is kind enough to you to say that allotted, if allotted when? Prior to 1/4/2001, then take cost of acquisition as FMV as on 1/4/2001. And what if it is allotted on or after? What if it is allotted on or after 1/4/2001? If it is allotted on or after 1/4/2001, then friends, its cost of acquisition is nil. Government cannot give you any deduction. They will say COA is nil. Comfortable? So why are you teaching us 1/4/2001 before that? Same logic. Your grandfather had purchased, your father had purchased, they gave you gift, or you got it in will, and now you are selling those shares. Then you are ready to take its COA as FMV. That is important. And lastly, original shares. Original shares is what? Very critical. Now my whole discussion will be on original shares. You will say, sir, such a simple thing. Whatever you pay, that is the cost of acquisition. So why are you discussing so much? Listen, why I'm discussing. I told you few seconds back. I told you few seconds back that earlier LTCG on sale of listed shares used to be fully exempt. Means whatever my gain could be in crores, that used to be fully exempt under section 1038. It used to be fully exempt. Means I need not worry. If I am selling my share in stock market after 12 months, it is a LTCG, and I did not worry, it used to be fully exempt. But one fine day in the budget, government said from next financial year, no exemption. From next financial year, tax at 10% under 112A for LTCG on sale of listed shares. So of course, as an investor, as a citizen of this country, my sentiments will be hurt. 10 Raghav Chaddas will come and say something. Yes or no? See, this original cost of acquisition which I am telling you, for understanding that, it needs you to understand history of what I am telling you. So when this budget speech was made, it was made on 1st Feb. 1st Feb 2018. Government said, sorry, but we will have to tax your LTCG on sale of shares which are listed. Investors would be in sad state of mind. How to console investors? Government said, don't worry. Because investor will say, government, you have destroyed our planning. Our planning was to sell these shares and pay zero tax. Yes, but what are you saying? Tax at 10%. We are not happy. We will not vote for you. We don't want this government. Government said, don't worry. What we are doing is with not retrospective effect. What we are doing is with prospective effect. Means we are doing budget speech on what day? 1st Feb 2018. We will apply this from financial year 18-19. First of all, PY 18-19 means AY 19-20. First of all, remember that. Second, remember, you have ICICI Bank shares, no problem. On which date? On 1st Feb, no problem. What was your plan? To pay zero tax and exit. Means sell and pay zero tax. Please take FMV as on 31st Jan 2018. What is the FMV on 31st Jan 2018 of those shares? Take that as COA. Don't cry. Take that as COA. Sell the shares today on 1st Feb after the budget. If 1000 rupees was FMV, today what it has become? 1002. Pay tax only on 2 rupees. Or rather, till 31st March 2018, so there is no tax also. In short, effect is nullified for gains up to 31st Jan 2018. How effect is nullified? From FMV, from FVC, we are giving you deduction of full FMV as COA. So your gain is going to be 0. So exit plan is there for you. Now don't cry and don't say that our earlier planning is disturbed. Your earlier planning we are not disturbed, because we are giving you option to take COA as, mind it, I had purchased shares in 8-9 financial year. I don't need to take that COA. I can take CO as, tell me. I can take CO as FMV as on 31st Jan 2018, which will obviously be higher. So I can take that and I can escape capital gains. That is the logic. And that's why when I'm talking about original shares, and I'm talking in which case? All these things are happening for listed. Because for unlisted, earlier also there was LTCG. Now also there is LTCG. This whole drama for listed. There are two possibilities. Shares are acquired when? Yes, friends. Shares are acquired prior to 31st Jan 2018. And what is second possibility? Shares are acquired, friends, pick up. Shares are acquired on or after 1st Feb 2018. If that is done, if that is happening, then take original COA. Then nothing. Original COA. Because now you know the law. On 1st Feb 2018, you know the law that there is LTCG of 10%. Now you know the law. Now you cannot cry. You could have cried for which shares? Which were bought prior to 1st Feb actually. So for that, what is the cost of acquisition? For that, cost of acquisition is original. But again you will cry if FMV is less than original. Because you will have to pay original, which is high. So government says don't cry. Take original or what? Or FMV. Take original or FMV. FMV as on 31st Jan 2018, whichever is higher. Don't cry. Take whichever is higher and escape once. And let us do what we want to do. Let us tax. One thing, but one thing you remember, this FMV cannot exceed FVC. Government has taken that care. FMV cannot exceed FVC, otherwise notional loss will be there. Government says FMV cannot exceed FVC, otherwise you will keep on claiming loss. First of all, is FMV actual purchase price or notional? Is FMV actual purchase price or notional? Notional. So because of notional, you cannot have loss. That's why this provision. So wonderful it is crafted. They have thought about you. They are taxing it. I am not justifying it. Otherwise, you think otherwise. What will happen? Promoters like Ambani's, Tata's, Adani's, Birla, they will escape. If you don't tax it, if you keep it fully exempt, then always they will keep on booking their gains without paying any tax. That's why we have to tax. And that's why if small people deal with it, it's not taxable, because it's not taxable up to first 1.25 lakhs. So if you still get a gain of 60,000, which is big first, then still you will not be paying tax. It's only beyond 1.25 lakhs per annum. So first of all, your planning should be so nice that you are making so much profit by transferring shares. And in today's market, tell me, everyone is so crying in today's market. Biggest fall, right? Thanks to Trump. So let's do one question, end this issue. Understand, I should not revise with you again, na? Rates of tax. I hope you remember them. Rates of tax on sale of shares. I hope you remember that. Listed or okay, I'm thinking only about listed because unlisted is as usual. Listed, listed only, listed. STCG is under section 111A. LTCG is under section 112A. STCG is at what percent? It was earlier at 15%. 15% is up to 23 July 24. After that, 20%. On or after 23rd July 24. Any doubt? What about LTCG? First of all, no tax on first 1.25 lakhs. Then after that at 10% till what date? 23rd July 24. And after that on or after that golden date. This already you knew. This already you knew. So far so good. We will go to Mithun. Then we will take 45 minutes break. After Mithun, then we'll take one more session and end today's discussion. In short, instead of three small sessions, not small, whatever, regular sessions, two big sessions. Because already it's 11:22 I can see, but I cannot afford to let you go without doing Mithun. Please go to Mithun. Otherwise, all our hard work will be wasted. Go there, go. On page 89. So maybe overall your class might get over today, like 2:33. See, go to Mithun. Are you there? Pay attention. I want to modify the question to some extent. With respect to one figure. Hello? 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 Friends, I want to modify only one point. I'll tell you. Mithun is there who purchased 100 equity shares. Originally, how many shares he has? 100. Are they of listed or unlisted company? That you will understand. Not by reading the name of the company, but by checking the transaction. If there is a STT, Securities Transaction Tax, then it means it is listed because STT is payable on stock exchange and no deduction of this STT while calculating any income tax. So good money on what date? 1/4/2007 at 1000. What is 1000? 1000 is COA. In public issue of company by paying STT, that means these shares are all of you listed. Company allotted bonus shares. When? When bonus shares are allotted? 1, 12, 23. And that too in a ratio of 1:1. Means one share for every one share held. So how many bonus shares he has got? Huh? Friends, you are not responding, huh? Then I will have to take class till 4 o'clock. We have new topics to be done. 100, no? Now totally how many shares is sitting with? 200. But do you agree? Original 100, bonus 100. Total shares are now 200. Do you agree that cost, what? Yes. Do you agree that cost of acquisition of original 1000 I'll have to find? Cost of acquisition of bonus is 0. Friends, one more thing. One more thing. Now, when you sell these shares, hello. Now, when you sell these shares, you are selling bonus as well as original. And it is first in, first out. But in this question, you are selling both. But what I am telling you is, listen carefully. Period of holding is different. For original shares, they are held from 2007. And bonus is held from 1 December 23. It might happen that one will give rise to long term and one will give rise to short term. And by the way, 112A, there is no benefit of indexation from beginning only, because already you are paying tax at a low percentage. So no benefit of indexation. That's fine. He has sold all shares on 1/10/24, means PY 24/25. So if you observe, bonus 1/12/2023 till 1/10/24, short term capital gains. On bonus STCG, on original LTCG, held for not more than 12 months, bonus. That's why STCG. For how much he has sold all the shares? 4,000 per share. So 4,000 into 100 for original shares, 4,000 into 100 for bonus shares. And already cost of acquisition for bonus, you know, nil. Only point remaining now is cost of acquisition for original shares. He has paid brokerage of 1% and STT neglect STT. STT you don't get deduction. Write it somewhere on the forehead of the notebook. Question is what? I want to modify the question. Compute his total income and tax liability is fine. If he pays tax under default tax regime is fine, assuming that he is having other income. He is having other income. He is having other income of rupees 8 lakhs. I want to modify this. He is having other income of rupees 8 lakhs. But that's what I want to modify. I hope all of you did the modification. Then tax liability calculation will be fun if we modify. May I modify? Yes. Please circle this other income 8 lakh. FMV, friends, FMV of shares, as on 31st Jan 2018 is 2000. What was original COA? 1000. Original 1000 or FMV 2000, whichever is higher. So you are ready to take 2000 as COA. That's it. This is what I wanted to tell you. Can I? Understood? Now see, friends, I will solve in rough. Then I will send you fair solution. Then you copy that. I will do it in rough so that you understand better. But while presentation, how to present, that I will send you ready-made solution. This question number 1. Okay, pay attention. CG. There are two CGs here. Hello. There are two CGs here. One CG is original shares. Other CG is duplicate. Not duplicate. Bonus. What duplicate? Original are how many? 100. Bonus are 100. So far so good. For both, friends, for both, FPC is how much? I think FPC is 4,000 per share. So 4 lakh. For original it is 4 lakh. For bonus also it is 4 lakh. Any doubt? On transfer of original shares there is LTCG. On transfer of bonus shares there is STCG. See, if you get any doubt, stop me immediately. Less expense on transfer 1%, 4,000. 4,000. So I will get what I will get. NST 3 lakh 96. Here also, any doubt till this? No. Then comes COA. Friends, COA in bonus is 0. And here you all decided 2000 into 100. 2 lakhs. Agreed now? Friends say yes. Why 2000? I will explain you. So what is your CG? LTCG slash STCG. What is it? In bonus shares, 396 is STCG. Here 196 is LTCG. Any doubt? Any doubt? Say no. If you don't have doubt, then say no. Now LTCG, STCG to I have calculated, but I want to know what is my total income. How will I calculate my total income? My STCG, you know, LTCG, you know, 396 and 196. Friends, and IFOS is there. How much IFOS is there? You feel 8 lakh, but 8 lakh is not correct. 8 lakh is given straightforward, plus there is something else also. They have told you, you receive dividend on the shares. When? When? First May 24 means after bonus shares. So you have how many shares? So what's the dividend? 2000. 2000 is dividend. Please. So IFOS is 8 lakh. Now tell me what is your total income. Now I will accept it. 13 lakh, you have to apply default tax regime. But before that, have you got 1394? All of you? Yes or no? Yes. Sure. Now what will you do? Take 1394, calculate tax on that. How will you calculate tax? Divide in three things. 1, 2, 3. Special income, balance income. First special income, LTCG. Next special income, STCG. Next special, matlab other. Other. LTCG is 196. STCG is 396. Others is 8 lakh 2000. And you are in section 115 BSc. That will matter here. That will not matter here. Because LTCG at, see LTCG under which section? 112A. This under 111A. From 196 minus 125. Don't ask why. You know. What is the amount? 71,000. When have you sold shares? First October, means after 23rd July. So into 12.5%. I hope all of you understood why. How much? Sure. This is your tax on LTCG. Come to STCG. You cannot minus anything. On 396, calculate at 20%. Same reason. 79, 200. All of you with me? On 8 lakh 2000 slabs. Slabs 0 to 3 lakh dash 3 lakh to 7 lakh at 5%, which comes to 20,000, and 7 lakh to 10 lakh at 10%. So basically 1 lakh 2,000 into 10%. 1 lakh 2,000 into 10,200. Can you take the total? 30,200. Can you take total of all three? 8875 plus 79,200 plus 30,200. 1,18,000. Add 4%. Health and education cess. How much? I did not get it, sorry. This 4731. So what's the total? 1,23,000. Like this. Round off. Under section 288B. 1,23,010. So many things covered in this question. LTCG, STCG, slabs. Huh? Never indexation will apply in case of LTCG of shares. No. Indexation under LTCG of 112A is not applicable. Never. Even if it was before. I told you now that originally rate of tax is less only. Let it be 10, let it be 12.5. Indexation is not applicable. In 112A, indexation is not applicable. Okay, so friends, I hope you understood all the things. Now what I'm going to do, it is 11:40. I will give you the sum solution, print this in the PDF. You present it, so that again you think on each and everything. Take 20 minutes for that. Then take half an hour break. So I'll see you at 12:30. When I see you at 12:30, anyone has any commitment, like lunch has to be done at this time only, or you have to go out with lunch, out for someone, out for lunch with someone, nothing like that, na? Or someone's parents are going to drop tiffin. Means, is it okay if I do from 12:30 to 2:33 and leave you? Fine. So no problem. So see you back at 12:30. Then 12:30 to till capital gain gets over. Little things are pending here and there. Okay. Means in short, I will not give you separate lunch break. That's what I'm telling you. Fine. So I'll see you at 12:30. That's it. Thank you.